I'll be the first to say I feel a lot of pressure to save and invest as much money as I can. Unfortunately, this also creates the pressure to make as much money as I can so that I can invest even more money. To save myself from this vicious cycle and the stress involved, I've been focusing on strategies that can help me invest more without requiring more income. So in this video, I want to share the 5 different ways I have found to grow my investment portfolio without making more money. And I don't just mean investing in appreciating assets, but using tools and strategies that can actually put more cash into your portfolio without it coming directly from your wallet. Then of course, this cash will go into assets that grow over time, helping you reach your goals a little bit sooner. Now, a lot of these will specifically apply to stocks and cryptocurrency, but there are still plenty of takeaways here if you just want to save more cash. For me, all of these tools combined result in well over $100 a month in additional investments, and they might for you too, so stay tuned. By far, the most lucrative strategy for increasing your investment portfolio is with referral programs. This is when you get a new user to sign up for a service using your unique link or referral code. Then, the company will reward you for bringing a new user to their platform. Referral programs within financial services are particularly powerful because the referral bonuses are often quite high and they're typically delivered in cash, stocks, or cryptocurrency. This means the money can go directly into your portfolio to continue growing over time, furthering your investment goals. The easiest place to start with referrals is getting friends and family to sign up for investing platforms. I'm pretty vocal about my interest in investing, so I often get asked about where and how to get started. I'm able to recommend my favorite investing platforms to people, which then rewards both of us for using the app. The best part is, it's a great way to legitimately help people start investing and building wealth, especially when they're unsure how to navigate stocks or cryptocurrency. Of course, you can reach even more people if you have an online presence, whether it's YouTube, TikTok, a blog, Twitter, or anything else. This is actually where the bulk of my referral earnings come from, because I often discuss investing topics that relate to the platforms I use. In fact, thanks to TikTok, I've recently been making more money from referrals than I do from ad revenue on my YouTube content, which I'll dive into deeper in a future video. But the point is, these referrals should not be overlooked if you're a creator looking for a way to monetize. My favorite referral programs at the moment include M1 Finance for stocks, which pays you and a new user $30. You can withdraw this cash immediately or put it into your investing pie to grow over time. For cryptocurrency, I use Gemini for crypto trading, which pays you and a new user $10 in Bitcoin. I also use Celsius Network for crypto interest, which pays you and a new user $50 in Bitcoin. With these, you can trade into another crypto or just hold the Bitcoin and collect interest, which is my preferred strategy. The next option is credit cards, and although this does technically require spending money, hear me out. If you're responsible with credit cards, they're a great way of saving a few percentage points on all of your purchases and collecting a variety of rewards, including cash. The trick is finding the credit cards that will reward you the most at the places you already spend, and then making sure you don't use those rewards as an excuse to spend more than you usually do. If you can stick to these safe credit card practices, you can use credit card rewards to invest all of the savings you accumulate. The worst case scenario here is that you use the credit card rewards to pay off your credit card bill, and then just invest the cash that you would have otherwise used to pay off that bill. However, this does take some discipline and conscious effort, which is why I've started looking for credit cards that specifically help me invest. The first I found was the BlockFi Rewards credit card, which pays 1.5% back in Bitcoin instead of cash. So as long as I'm spending how I usually do, I'd earn Bitcoin every single month without having to deliberately deposit money onto a crypto exchange. Of course, as I mentioned in a previous video, the BlockFi card didn't quite deliver on what I wanted it to be. I still stuck it out for the first few months to earn the sign-up bonus and will have earned about 0.004 Bitcoin by the end of this billing cycle, which is about $250 at the time of writing. That's not bad for not doing anything outside of my normal spending, but since the rewards from this card just weren't that strong, I've discontinued it until a better crypto rewards credit card comes out. Currently, I've got my eye on Gemini and Celsius Network to see who does it best. The next I found, which I covered quite recently, is the M1 Finance Owner's Rewards card. With this card, I get up to 10% cash back when I spend at companies whose stock I also own. This includes things like 10% back at GameStop, 5% back at Chipotle and Starbucks, and an unlimited 1.5% back on any other spending. I really like this one because it incentivizes you to invest to get the rewards, and then all of that cash back is automatically reinvested into your stock portfolio. Now, this card may not be cost efficient for everyone since there are some annual fees and other requirements involved, all of which I covered previously. But for me, it's a super exciting way to continue growing my portfolio while I spend at my usual stores and restaurants. I've already earned $10 in cashback rewards in the first week of owning this card. Next is covered calls, which you should not overlook if you're investing in the stock market. Covered calls are an options trading strategy, and I promise it's less complicated than it sounds. With a covered call, you simply sell someone else the right to buy your shares if they go up in price. When you do this, You immediately get paid a cash premium. You can then use this cash to reinvest into your portfolio, thereby growing your portfolio without actually putting in more money. The best part is you have complete control over the variables in this strategy. You get to select what price the other party will pay for your shares, called the strike price, how long they have to make the purchase, and how much they'll pay you for the contract itself. Here's a quick example with one of my own holdings. I own STEM shares, currently priced around $21, and I don't think they'll hit $25 anytime soon. So I can sell someone else the right to buy my shares off me if they do. I might choose to sell a $25 call that expires on November 12th. This means that if the price ever goes above $25, the person who buys the call option can then purchase my shares from me at $25 each, but only until November 12th. The premium I get is the 35 cents per share for this option, which is equal to $35, as each contract represents 100 shares. This means that there's only two outcomes when selling a covered call. First is that the price increases above the strike price, and the other party decides to buy your shares. You may miss out on some profit if the price goes higher than the strike price, so make sure you're comfortable with selling at that price before you write the contract. But you also get to keep the premium on top of selling your shares, which further boosts your profits. The other outcome is that the shares never reach the strike price, so the other party can't buy your shares, and the contract expires. In this case, you keep all of the premium you collected, and you can sell a brand new covered call and repeat the process. This is another strategy I broke down in depth in a previous video, and I highly recommend watching it or something similar before getting started. But once you get an understanding, covered calls are a great way to earn income that can easily be reinvested right into your portfolio. I've been selling covered calls every week or two on my STEM shares, not even that aggressively, and I've consistently earned $10 to $20 a week. Next, we've got crypto interest accounts, and if you've been watching my videos lately, you'll know this is one of my absolute favorite ways to grow my investments. Just like a traditional bank savings account, crypto interest accounts will pay you interest on your cryptocurrency balances. When you make a deposit into one of these platforms, they use your liquidity to provide loans to other customers. As they collect interest from those customers, they'll pass along some of the profits back to you for holding your assets on their platform. Again, this is exactly what banks do with your cash, except there are two major differences. The first is that crypto interest accounts pay much higher interest rates than banks do. Banks infamously pay fractions of a percent, while most crypto interest accounts fall in the range of 2 to 10% APY. The second big difference is that instead of cash, crypto interest accounts pay your interest in the cryptocurrency that you're holding on the platform. This means your cryptocurrency balance will compound over time, and as cryptocurrency assets continue to appreciate, you will earn exponentially more interest. It's no secret that my favorite crypto interest account is Celsius Network, which currently pays 6.2% on Bitcoin, over 5% on Ethereum, almost 9% on stablecoins, and supports dozens of other altcoins that are usually left out. To top it all off, they have no minimum balance requirements, no lockup periods, completely free transfers, no fees whatsoever, and interest is paid out every single week. They also offer crypto loans and have crypto credit cards and crypto swapping features coming soon, so this may very well become my all-in-one crypto app in the future. I currently earn about $10 per week in Bitcoin interest, and it's so cool to watch that number increase week after week. Last up, we've got cash flowing investments. Obviously, this one is an investment, so it will require you to put your money into something, but it can be a really impactful way to think about investing. If you focus on investing your money into assets that will produce a consistent flow of cash, then you'll have a source of income that can continue fueling your investments over time. I know real estate is generally seen as the cornerstone of cash flow investments, but there are so many other options out there. The next most common is probably stock market dividends, because those can be plowed right back into your portfolio to accelerate growth. As we looked at earlier, you can also do this with stocks that don't pay dividends by using covered calls. And again, you can do this with cryptocurrency by holding it in a crypto interest account. I've also done this with cryptocurrency mining, which earns me a couple $100s a month on the low end to either hold or reinvest into other cryptocurrencies. And finally, even a business can be a cash flowing investment. When I started looking at my YouTube channel like a business, I was able to use my money wisely so that I could work more efficiently and get a higher return from making videos. Now, I make money every month that I can use to invest, spend, or continue growing my online business. The point is, there are a lot more ways to get cash from your investments if you reframe your perspective a little bit. And that's been really valuable for me over the last few months. It's helped me relax and follow simpler investing strategies, knowing that I've got a lot of components working for me, even if I'm not putting money into my portfolio every day or every week. But if you have any other ideas for accomplishing this goal of investing more without making more money, I'd love to hear from you in the comments. And if you're looking to get started with cryptocurrency and crypto interest accounts, check out my previous video where I walk through the exact step-by-step process I use to get the best returns. I'll see you next time.